Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be taking a look at my top 3 best performing stocks in 2025. Now, the reason I wanted to make this video is because we are getting pretty close from the end of the year. We're about 2 weeks out from finishing off 2025, so I thought it'd be a great idea and pretty fun to take a look at my holdings that have performed really well so far this year. Now, if you guys do enjoy that type of content and appreciate the transparency, subscribe to the channel. I post weekly investing content. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, with that being said, let's start by taking a look at my portfolio dashboard. So in total, I have invested over $54,000 and my current portfolio value sits at over $76,000. Now, my unrealized gain is at almost $22,000 with a total return of about 40%, which is pretty good. Now, in terms of dividend earned, I am the dividend aristocrat, so I like to focus on dividend paying stocks, but I also hold stocks, as you can see down here, that don't pay a dividend. In general, my preference is dividend paying stocks, but it just depends on the opportunities. So in total, I've earned $2,200 in dividends, and every year going forward, I'm expected to earn about $1,168. Now, my portfolio yield is pretty low at 1.52%, but my yield on cost is a little bit higher than that, and that's because I purchased a lot of these stocks at much lower prices when they had a pretty high starting dividend yield. Now, without further delay, let's take a look at my top 3 best performing stocks in 2025, and I already filtered them out right here in my portfolio holdings section. Now, this doesn't mean these are my best performing stocks in the portfolio in general. It just means that in 2025, after I checked out every single one of them individually, these happen to be the best performing stocks in my portfolio that did really well in the year of 2025. Now, you'll see in some cases, for example, Uber is up 31% in total since I purchased it, but that's because I purchased it in 2024. So for anybody who bought it January 1st of 2025, you'd actually have a higher total return than me at over 40%. Regardless, let's take some time to take a look at them individually. So we'll start with Google. I paid about $146 per share and the current price is at $309, so some pretty crazy returns on the company so far. Hopping into my order history section, you can see all the buys that I've ever made into Google stocks since starting my portfolio. So right here in 2022 was the first time I ever purchased any shares of Google, and it was some very small positions at 1 share at a time basically. Now, my initial buy was at $100, so in this case, I'd actually be up 3x on this initial purchase. And if you look down here, I actually kept purchasing as the price went down, with some of my lowest buys around $93 and then even one at $85 per share. Now, if I had loaded the boat at $85 per share, my total return would be pretty absurd at over 200%. Now, at the time, the reason I purchased such a small initial position is because my portfolio size was much smaller, so I wanted to manage my allocation. Now, since then, my portfolio has grown and so has some of my risk tolerance. Google actually makes up over 14% of my total portfolio value right now, which is much higher than I ever expected. Now, long term, I do hope that the number will come down as I continue contributing to other positions in my portfolio, but for now, I'm fine with it being at such a large percentage, even though it is a little bit more risky. Now, after that, I didn't buy any more shares of Google for almost 2 years, where I purchased some shares in 2024 at about $150 per share. After that, I dollar cost averaged up a little bit because I thought it was still trading at a pretty good price. And then in 2025, when the price started fluctuating a little bit all over the place during the whole tariff dips, as well as the scares with the lawsuits that they had, I continued purchasing more shares in the company. Now, at this point, when it hit $140 per share, I'd already purchased so many shares in the company that I couldn't put too much more into it. The allocation was getting too high and my cash position was just getting a little bit too low. Now, going back into my portfolio holdings section, I'm actually pretty content with how much I was able to purchase of Google shares at the time. I purchased over $5,000 worth. That's 35 shares in total. And then you can see right here, the current portfolio value sits at almost $11,000. Now, just to be fully transparent with you guys, I don't see myself purchasing any more shares of Google going forward. The price would have to come down substantially. We're talking over 30 to 40% at least. That's because my position is already so large. If we slide all the way to the right, we can see the allocation right here is at 14.2%, so a little bit risky and a little bit over allocated right now. Now, in the future, if this allocation does come down and Google starts trading at a more reasonable valuation again, I could see myself purchasing some more shares if the opportunity does arise. And just to take a look at its year-to-date performance and see why it's such a strong stock within my portfolio, we can see that this year it's up over 63%, but believe it or not, it's actually not the best performing stock of the list for 2025. Now, over the past 5 years, the company is up over 248%, which means that it more than 3x in that time period. Now, moving on to our next stock, it's Intel Corporation. I'm surprised that I'm making a video on this company, and actually just a little bit ago, it was trading even higher than this at about $45 per share, so it's certainly come down just a little bit since then. So my average price paid is about $24.82, and the current price sits at $37.81, which is a pretty substantial increase. Now, taking a look at all my purchases, this is a significantly smaller position, and that's because I believe that it's a much riskier company. I'm basically investing in the hopes that there is going to be some sort of turnaround play for the company. Now, so far, that hasn't really materialized. If anything, I was down substantially just a couple of months ago, as you guys may have seen in some of my videos. Since then, there has been a pretty significant reversal in the direction that the stock price is heading. However, the fundamentals don't look so great just yet. So far, I think it's just growing based off of future hype, but if that does not materialize, the company's stock price is going to come crashing down again. So I initially purchased some shares at $27.30, and then the stock price, I believe, went up pretty substantially afterwards, and I was seeing some pretty nice gains. It was at one point my best performing company in the portfolio. Now after that, the company's stock price did come down, which is where I believe I made these purchases here in 2024 at 30 and then $28.99, and the company's stock price was kind of going up and down during this time period, not really going anywhere. Now then in 2024, they had some pretty bad earnings reports and the stock price came crashing down. $21.93 is where I made some more purchases, then some more at 20, and then some more at $19.50, but that's kind of where I drew the line. At that point, it was already about 1% of my portfolio value, which is kind of where I wanted it for a very risky play. That way, if the company does go under, I'm not risking too much money, but it still gives me an opportunity to play around with a small percentage of my portfolio. Now, the company's stock price did continue to dip down after it hit $19.50, but I just did not purchase any more shares. So in terms of how many shares I purchased 24 shares in total, and at first they were paying out a dividend, which is why I have some more shares including the dividend reinvestments, but now they're not paying a dividend that I know of. So I invested about $600 in total, and the current value is sitting at $915, so it's about a 53% total return in terms of gains. Now, like I mentioned, at one point I was earning dividends, but now their yearly dividend is down to zero. They have canceled it for now, which is not a great sign to see, but my allocation is about 1.2%, and that's because of the recent gains that we've seen, so I'm not risking too much money on the table. It's about a $600 investment. Now, I don't have any plans to purchase any more shares of Intel going forward. I'm going to continue holding this position for now, and if I decide to sell it, I'll definitely make a video on that topic. Now, in terms of performance, Intel is my best performing stock of 2025, and it's up almost 87%, which is ridiculous. Earlier this year, it was trading about $20 per share, and now it's trading much higher than that. And at some point, if we look at the peak where it's trading about $44 per share, you could have been up about 116%, which is crazy. Now, this is a risky play. They're not really profitable right now. So as you can see, their PE ratio is 3,500, which is ridiculous. But if they can improve their fundamentals, then they might be able to warrant this ridiculous valuation. So far, I'm not seeing it, which is why I'm playing it safe with my position. Now, if we look at the 5-year graph, you can kind of see how it's been all over the place. So I purchased some shares in 2022, then the price increased all the way up to $50 per share, and I thought I was doing well right then and there. But since then, it of course came crashing down pretty aggressively. Now, we'll have to see which direction it goes in the future. It has a bunch of support from the US government right now, so I don't think they're going to go under, but we'll see if they're able to right this ship. And the last company that I want to talk about today, which is one of my favorite companies in the portfolio, is Uber. And if you guys haven't made it this far into the video and are enjoying it so far, leave a like. It helps out the channel a ton. So my average price paid is $64.81, and the current price is at $85 per share. But just a couple weeks ago or even months ago, it was trading at $100 per share. Now, I personally think that Uber deserves to be trading at about $100 per share right now. They've been doing a fantastic job on all their earnings reports and growing their revenues pretty quickly, but I'm in no hurry to see those gains. If the company's stock price does dip below $75 per share again, I'll probably be purchasing more shares, and if it dips below $70 per share, I will definitely be increasing the size of my position. It's already a pretty large position of mine, but I would not mind increasing my allocation in the position. Taking a look at my order history for Uber stock, you can see that I started purchasing pretty significant portions right from the get-go. So I purchased 8 shares right away at about $500 for the total order, and that's because this is a newer position of mine made in the end of 2024. Nowadays, when I make these investments for individual holdings, I tend to go a little bit more aggressive because I don't want to be stuck in a position that's happened to me before where I buy one share of a company and then the stock price races up and I don't have an opportunity to buy any more because it's too expensive. Now, there are pros and cons to that. Sometimes I end up buying a stock too expensive. We've seen some examples of that in the past. Let's say if Uber is trading at $90 and I think it's a good position, I buy 10 shares at 90 and then the price drops to 70. It feels like a bit of lost money, but I'd still rather do that than miss out on making a position in a great company at a fair price. Now, in the case of Uber, I was actually buying it pretty cheap. I got 8 shares at $61 and the price dipped down a little bit, so I kept nibbling and purchasing some more shares. And you can see I was making some big investments here at 10 more shares at $64 per share. And then after earnings, after they did a good job and the earnings actually brought their stock price down, I purchased 15 more shares at $70. Now, if I was a little bit more patient, I could have bought some more shares 2 months later at $62 per share, but it's no big deal at all. In total, I purchased 66 shares of the company at a total cost of $4,200, so I'm pretty happy with that. I was able to build a pretty large position in just a couple months. Now, I have not purchased any shares in a while. Like I mentioned earlier, if it dips below 75, I'll very likely be purchasing more shares, but at $85 in my current position size, I don't think I need to add more to this position. I like to manage my risk through my allocation, so I try to avoid making positions too overweight unless it's a really good opportunity. Overall, my position is up 31%, but earlier this year, we were actually up substantially more than this. Jumping into Google real quick, we can see the performance year to date so far, and if we take a look at a price tag about 63 per share, you can see that at the top, it was up almost 60%. Now, I purchased at about $64 to $65 per share, so if we grab this point here instead and look at the peak, you can see that I was up over 50% at some point. Now, I would personally ignore this PE ratio here. It looks super low, and it is, but it's very deceptive because they have a lot of external investments. Now, in the past 5 years, it may look like it was not that great of a performer, but you actually have to consider that it was overpriced in 2020. And if you were able to buy anywhere here in 2022 or 2023, you'd actually be sitting on some pretty nice returns, in this case, over 300% from the bottom. Now, I definitely wish I was paying attention to this stock back in 2023, but unfortunately, I missed that opportunity. Now, hopping back into my holdings section, we can see that it does not pay a dividend, but my allocation is shown right here, and it's pretty high. Right now, this position makes up about 7.3% of my total portfolio, which is a big reason why I'm not increasing the allocation just yet. Now, I feel pretty confident leaving it at such a large position. I think over time, like with a lot of my other shares, it will balance out and kind of come down as I increase other allocations. Now, as always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my 3 best performing stocks within my portfolio for 2025. If you made it all the way to the end of the video, let me know in the comments down below what your best performing position was. I'd love to hear it. If you haven't yet watched last week's video where I talked about my dividend income for the month of November, check out this video right here. And if you want to see my video featuring Uber and why I think could be a good opportunity right now, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.